Hello guys, how are you? Just checking if you can hear me. Yeah,
Yeah,
Brian
we can
and
hear you.
Hey Joe, Brian, how are you? Just to let you know your cameras are on. Perfect. Just wanted to be aware that the cameras were on. I'm just gonna wait a little couple of minutes for everyone to join. How's everyone doing? How was your trading day today? For me, it was choppy. Did not like this price action on SPY today. And it goes like sideways like this. So I wasn't thrilled in many things. I traded Ford, as I said on my tab, and I left two contracts that probably after that move just went, to zero. But I had 10 contracts. I took gains on eight, and I left two for earnings. So I'm that way I kind of uh cover whatever, losses on that couple of contracts. I'll be up in my average for the days with the eight contracts and taking this one two losses. So that's sometimes how I think it's the best way, in my opinion, to play some earnings. If you have some gains during the day, if it's on the same name, it's just fun. I mean, doesn't matter and it doesn't care, but it's a matter of kind of a play. Like let me make some gains on that name, and if I have, if I made enough, I will risk some on earnings. So that's how I play Ford today. Did anyone else play Ford?
No.
No one. Yeah, I was kind of, my gut told me that they were going down because I know that in general, EV cars in most of the names are not doing well. But for some reason, I thought that if the guidance was doing a little better, maybe we had the chance to go higher, but nope. That's when you have to learn that. That's when it was good to have, 10 contracts, trim eight, and just leave two for earnings. Um, Instead of having three contracts, you know, take earnings on two and then just leaving one, I would have had more damage on my average for the week. Therefore, it's one way to be more efficient. Postway, did you buy puts or were you shorted or you long it? So you bought calls. Oh, yeah, yeah, yeah. That's why when I did the little analysis on in the morning on the pre-market, I was kind of like it it was they were not doing bad, but it was going to depend on those EV numbers and the guidance and the future guidance. So if the guidance was not that good as it seems that they lowered the expectations, that's why it went off. So one of the advantages is like you don't you instead of you were in, more than 20 contracts, it's hard to get a lot of damage on Ford. The problem is like sometimes because it's really cheap, you can buy 40, 50 contracts and then that's where the damage comes. And maybe Scion Ford was doing shit, but I believed with the other factors, it would have risen. Yeah, yeah, I'm on the same train. I was expecting the guidance to be better, but it seems that it was not our way. Let's see. Do you have same weeks, or do you bought sometimes in case of this happen? that you have that you can arrange or add some to see if there's a chance to save those contracts. You bought it for the first sub. Okay. Yep. Let's see. I mean, still, remember, we've seen this. Yeah, hey, let's see. Let's see what happened on the on tomorrow. Remember, pre-market, you never know. There's always some things that change. We if we have a little pop to 11, we might have some chance to save them. So we'll see how this develops. Um, are you able to see my screen, my introduction screen about understanding the VIX? That's what you have right now on, guys. Just double checking. Yes. Yeah, we see it. Thank you. All right, guys. I thought it was uh, kind of relevant. I think that's the word that I'm looking for. That due to the times that we have on earnings and the expectations that we always have during these times, to talk about and a little bit more about the VIX. I don't know if all of you know about it, if some of you know some, but I'm just going to touch a little more into what the VIX is, what do we use it for, how can we trade it, and how can we use it when we have these uncertainty, like uncertain times on trading. Sometimes we can use it as a hedge, sometimes we can use it as a guide, and I thought it will be, kind of cool just to change a little the everyday lectures that we have in SMAs and indicators and just going through trades only, but learn a little bit more about other tools that we can use. Cookie, can you're not able to hear me? Is anyone else having trouble hearing me? Let me double check. I got system, I got sound. All good here. I can hear you fine. Perfect. Cookie, seems that there's something with I got my microphone on. I got my speakers are all on. And my microphone is 100% and working on this side. And on my side on here, my speaker, it's working, and my microphone is working. Yeah, I fix it. Was on my end. Perfect. All right, guys. So let's start with this. Let's start with this. So what is volatility? So the degree of variation in trading prices over time indicate market uncertainty. Why do we like this? Remember, we are traders, we are day traders. We normally like to trade volatility. If we don't have like days, if we have days like today, that the SPY just went sort of sideways between 581 and 582, and we don't, if you would have just scalp on the very, short term frame and go to the I don't know, 3 minutes and try to go on that channel between 581 and 582, you could have do some scalps. That's not what we really are in for, in day trading. We wanted to do some moves for 577 on the way down, or did we broke 582 and we go through two all-time highs, something different. And that's why for us it's key to have volatility, and most of us know that. If there's anyone who were able to make a lot of money today, unless you play puts on Nvidia or something like that, well, congrats. But normally when I see the SPY or the ES or the NQ not moving much, I kind of, sit on my hands and wait. Why this is important? Well, the VIX, it's a measure of market risk and investor sentiment. We know how the volatility, depending if there's a lot of volatility, there's mixed feelings on what's going to happen. If we don't have that volatility, there's a consolidation happening, and remember, a compression of the market always, it's followed by a move, either up or down. Um, I'm expecting that SPY is gonna. I don't know if it's waiting for Apple on Thursday afternoon. Remember, we have Apple earnings on Thursday afternoon, but there's gonna be a factor that is gonna move SPY up and down, and from there I will follow what else and what other names I will try to trade. The VIX, it's called a fear gauge. Why? Because it's the way on how, depending on the volatility and how high or low the VIX goes, it tells us how that volatility is happening in the market and how what we can expect from the market. Sometimes even though we would like to trade volatility, when the volatility is too crazy, that's the other end of of the problem. Like we have been like too shallow or with too shallow movements and we don't have enough volatility, or the extreme volatility on the other side. That's another time when you're better off just not trading and sitting on your hands waiting for the moves that can scale up and down to happen a little better. So that's one thing that we need to try to be a little bit sensitive when we see those price actions, when it's the best time to trade. This is just a chart as a reference of the VIX. This is a 4 hours for the last 30 days. This is look at that spike on volatility that happened on August 5th of this year. And this is when we have the huge sell-off, because we thought that we had some fears of recession, and we had a little sell-off. And when we have sell-off on most of the names and stocks, look how that VIX went up. We can take advantage of that, and I will go later in detail, but we can trade options in VIX. We cannot trade shares in VIX because the VIX is just a guide, but we have the VIXC. If you would like to trade something different, and if you would like to try to grab shares to hedge or to buy, and also calls, it's called the VIXC. That will be the ETF out of the VIX. It's the same thing that we cannot buy ES or NQ, but we can buy SPY or the QQQ. So the VIX is just a general indicator of what the volatility is, but the ETF is going to be the VIXI, and we will see that later. But look at how huge that move was. So, and this is the VIX on a shorter time frame. I just wanted to show it how different we can see. How do we manage this volatility when we have the 1 hour and 20 days? In the 1 hour, look how the volatility was fading, was coming down, 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 and then all of a sudden, it was flat. It's doing that. It's holding that support on the yellow line. It's the 50 daily SMA, and it's holding, holding, holding. And no coincidence that we are just getting right now into earnings week and earnings session. And if the further that we see this, and I will at the end of this week, I will try to make another chart like this, and I will post it on my tab, that I will show how the 1 hour and 20-day probably went up close. I don't know if it will go all the way to 23, but it will go closer, higher to 21, 22 for sure, because that will be something that the expectations of what is going to happen on the banks, what's going to happen on Nvidia, what's going to happen, sorry, not Nvidia, on Apple, and all those names from the Magnificent Seven are going to be key on how this volatility trades. One of the advantages to remember that we can see is we can trade options on this. And at the end of the lecture of the slides, I will go to the TOS, and we will see a little more about how those contracts look, how expensive they are, and what we can do about those to trade them. But we can use them as a hedge. Like if we see that the market is coming down, we can always buy some VIX options and try to uh, take advantage of the momentum of that specific name. Okay, so I want to talk about a little bit about the history of the VIX, because I want you to know not only that we can use it for uh, hedge or just as a fear gauge, but I want to talk and learn a little bit more about what the VIX is and when it was created. It was made by Professor Robert Whaley in 1993, and it has changed the methodology since it was made in 1993. So I just wanted to put a little sort of timeline of how do it started in 1993. Then it was only charted on the CBE, which is the Chicago. It was just a Chicago exchange, sort of, and it was created on the Chicago exchange, trade exchange. And then after that, it developed into the further S&P 500. It was added to the S&P 500. That's one thing that it was very important, because that way it gave everyone the tool to really be able to measure that volatility. And after that, that global exchange was added from the Chicago Board of Options. That's why the specific VIX uses options to be traded from. And we'll go through those. And one other thing that is very important, guys, is normally all the indicators that we use are considered laggards. Therefore, all the indicators that we use to try to analyze what's going to happen, they're considered to be a projection of the past certain amount of time, right? So we use the 20 daily SMA, it's going to give you the past 20 days price action. If we use the 5 minutes, it's going to give you the previous 5 minutes price action, depending on a day, but every candle is going to be 5 minutes, and so on and so on. But the VIX, for the first time, it's considered a predictive or forward-looking index. And this is what it's interesting about it, because instead of being a lagging one, it reflects what the market expectation of the future is going to be for the next 30 days. And how it makes so, it's made on the next 30 days, and it's based about those 30 days of options pricings of the S&P 500. So let's make, this is a very, very important difference. The VIX, it's not like S&P 500 that is just giving us a specific time, and it's not like the NQ that is just giving us like the futures, but it's also a future of the 30-day price action of the next 30 days price options price. And this way, it's a way to see how we can prepare for what's coming in a way. It's forward-looking in nature. The VIX is calculated from the implied volatility of the S&P 500, and it's based on the trader's expectation of future price swings. That's pretty interesting, and this makes the VIX an indicator of anticipated volatility rather than an account of past volatility. And that's how it's so useful. Normally, every indicator that we use is just a measure of the past price action, but this one, it's based on it's not based, it's of anticipated volatility. So that's very important and key on why do we use the VIX. And if any one of you was in pro today, and MMA was talking about how he always has the VIX or the VIX in one of his charts, because he wants to see or be aware what the anticipation of that price action or volatility could be. The market sentiment insight, when the option traders expect significant movement, either up or down, the expectation is implied in the price of the VIX, so leading to a higher VIX. Therefore, spikes in the VIX often reflects anticipated turbulence in the market. Every time that we see the VIX starting to pump, we can expect not only normally that the market is going to come down a little, but there's going to be a lot of moves. It's going to be turbulence. That's, I think I like that word a lot. And so what do we do with this? We got to be very careful depending on how heavy are we on any position. And another thing that I like that we discussed today on, I jumped from the pro VC to the premium VC a couple of times. And in both, we were talking about how to position when we have volatility and we are on these expectations of what the market is going to do. And one of the things that it's really interesting is normally most of the traders will try to trim and cut a little of the risk of most of our positions when we have volatility coming in. Why? Well, when volatility comes, we don't know what's going to happen specifically. We have expectations, but we don't know. Remember, our job is to try to predict what's going to happen on the market, and that's why we buy or sell depending on that prediction based on a supposed to be educated prediction that we do. Everyone has different information, and everyone is going to have a different opinion on what's going to happen. Our job is how do we protect our portfolio every time that something's going to happen. And when normally most of traders, when volatility is approaching, we try to trim a little our position and we try to protect. And also we have to gather cash for future or further opportunities. So when we have volatility coming in and all of a sudden we have some, dips, I want to be out of positions where I made money already and my levels were met, to try to grab that cash and use it for another position and try to do the same over and over again. Remember, our job is to do that snowball sort of action, not to leave those shares there forever. Sometimes when we have smaller positions, it's a little bit different, but sometimes I'd rather just sell that position. If I was on Carvana and my Carvana position went to 30%, and that's what my expectation was, I just sell the whole position, grab my cash, and just wait for the next move. I might grab Ford right now that it's at 10, or wait tomorrow if some of those shares, if it dips a little more, and try to see if it goes back to 11. And that will be a 6 to 10%, on the move on the stock. But those things are what we hope to do normally with our money. And that's how we multiply the money, using it either with shares or with options. Another point on why do we use the VIX, it's because it's a leading indicator for market stress. The VIX tends to rise ahead of major downturns or during periods of uncertainty, such as economic crisis or unexpected geopolitical events. As investors, hedge against potential declines. And that's what we're talking about. How do we normally anticipate what's going to happen? Since we don't know, we could have just been do a huge flush between Friday and today and just keep going down and down and down. That's not the expectation that we have at this time for the market. The market's been holding, but we do have two events that are key for this week. We have data on Friday, and we have Apple declaring earnings on Thursday, and we have to just be careful on how we're going to position our board for those activities or events. However, the VIX doesn't predict the market direction. We don't know it's going to go up and down. That's on us and do our specific due diligence, but rather it gives us the level of expected volatility. With that, we should be more than enough to try to guess, in a way, where the market should be, or try to prepare yourself, in any case, to jump into either direction. And that's one of the big advantages on why do we use it. And the third one is how it's a correlation with the market movement. Normally, while the VIX usually move inversely with the S&P 500, and that's why most of traders use the VIXy or the VIX, where you can trade options as a hedge for the S&P 500 or of some of those S&P 500 names or tickers that we have. It is not foolproof in predicting exact market moves, but instead it signals changes in market sentiment and potential volatility, meaning that normally a higher VIX indicate that traders expect more price fluctuation rather than pinpointing specific upward or downward trends. So it's a very safe way to know, okay, there's going to be a little choppy coming in. Am I ready for this choppy? Am I ready? And depending on how big that choppy is, it's gonna give us opportunity to cut to trade, or like today we were in a close sort of sideways range, not good enough to do like big trades or interesting trades to participate on full position, or at least in my opinion. We don't need to go into the specifics of the VIX calculation. I'm just going to put it here to see how it works. So, and I'm just going to go through it pretty fast, that we are not, thank God, like today, nowadays, all our brokerages just, you just click the VIX and it will give you all the information that you need. But just to, you can be aware on how it's calculated. So we have to determine what the time of the expiration is. We have to calculate what the forward price will be, and that's why we use the prices of the S&P 500 options to determine that forward price. Then we determine what the strike price is of those options, and then we calculate what the option prices will be. And at the end, we calculate what the variance for each of those terms are. And that is this formula. It's going to be here whenever you need it on the lecture, but normally we have all these calculated by our brokerages, and we don't need it, but it's always good to have it. I'm going to go through some charts so that we can see events on how the VIX has been moving in a difference. So this is why it's called the fear index. And this is why this is the inverse relation that we have between the VIX and the market in general. And some of the examples that we're going to use are the 2008 financial crisis and what it's considered to be a low period of volatility, or let's say that it's going to be the standard, that the VIX is normally around 10. And this is a chart, and how you can see here, this is the S&P 500 normally going up, and this is the VIX. Like depending on normally historically, this is how the VIX, the S&P 500 has been moving, and this is historically on the longer term, because this is 24 years how the VIX has been moving. This is just a comparison. Can you see how a little bit the fear has been gone a little lower, and the prices on all the equities have been going higher. But it's pretty interesting to see it, and I always like to have these visual cues and how to understand how some of these tools work a little bit better for us. And this is using TOS. This is just how we were able, like on these times here, this is when we have like those flushes on the market. This is the 2008 financial crisis. This is the highest that the VIX has been at 85. And then August of this year, the VIX went to 65. That it was pretty big for all of those years so far. This is one of the fears of recession when it went the highest. And even in COVID time, or any of those other times within those 24 years, this is the biggest. Like around this area here, probably is when we have the COVID happening, and look how different this was. So it's very interesting to use, and we can trade it, which is more into our advantage. I just wanted to touch based a little bit on how do we trade it? How do we use it? How do we use the VIX? So the VIX futures and the options, they are the same thing. That we normally use options for it, and we use it for hedge or speculation. For hedging, we use it like, for example, I think, sorry, MMA was buying some VIXI shares just in case whatever happened in the market between Apple and data that is going to be on Friday. And let's say that you have your portfolio, it's $5,000. you can buy maybe, I don't know, $1,000 or $500 on worth of VIX in case that the port comes down. It's not going to go to zero, hopefully, but whatever comes down, you can hedge it with those shares, and it's going to sort of help on average down that volatility that your port is going to have when we come down on the market. And then you can, of course, add up on some of the names when they come down. You add some price average on your positions, and then wait for the next leg up. The market setups was to anticipate a market downturn and predicting a rise in volatility. For future trades, you can buy VIX futures with the expectation of an increase in the VIX, and the outcome it will be if the VIX rises, you gain from those future contracts offset the potential losses that you had on your regular stock portfolio. So that's what I was saying. In other words, if you have expectations that the data is going to go bad and the Apple is going to come down, you maybe can buy to hedge Apple. I can buy some VIX shares that they're going to go up, and then I can average down whatever the price of my Apple stock is going to come down with it. So normally it's just a hedge system that most of us use in case of if you're holding long-term positions, or if you just want to speculate. You just think that the volatility is going to come in, you can buy options on it, and then just as any other name, whenever you're in gains, just take them, and that's it. The only bad thing about it is if you're trading the VIX, the problem of the options, as normally we all know, we have the time and the IV fading that we always have to take care of it if we are not in the money. The purpose of hedging is to mitigate the risk on your portfolio, and the mechanism is just to buy VIX futures as a hedge. If the market drops, they will increase, and if the market rises, it will offset your portfolio losses. And for speculation, same thing. So we talk about this. That's one way to use it. And this, before jumping into any charts that I want to show, there's any questions about the VIX until here so far? Anyone? All right, let's jump into some charts and let's see what do we got. Let's go to this one here. So all of you can see right now my SPY chart, right? I'm gonna go to a gonna create a draw set. That's gonna be clean with nothing in it. It only has some of my. These are my. Let's say. I'm gonna grab the chart. It's fine. I'm gonna grab the 4 hours. And clean. There you go. So this is the SPY. And this is the VIX. If you click just VIX, this is what we got on the VIX. Market sell-off. This is on the 4 hours. This is what we got. One of the things that we can go through is what happens if I just want to trade the VIX as a normal ticker? Well, this is the price action of the VIX right now. You can always trade it without any trouble. You have to chart it. This is what I got. If I go to the 1 hour, this is what the VIX has been doing. We had a higher level at 23, and we can always just go through, do some little levels here. I'll go through this, and then we can go to this lower one right here, and then we copy this one here, and this is more or less the range that we're trading right now, and this is where we are waiting at the moment. We are between 18 and 20, and my expectation is, depending on what the data is going to be at the end of the week, we might jump again to 23 or somewhere around here. So if you want to go through here, you can always go and trade it. You can go to, let's go to the products here, and these are the positions that you can get in. You can have, 30th of October, November, 13th of November. You see how they jump in weeklies. And these, I grabbed some position here. I got some 180s, as you can see, at 25 on 180s. And that's the way how I'm hedging for future movements on my port right now. This is the trading port. And you can see here, look at the prices. They're not that insane as we have seen in the premiums are not that high. And we have good open interest. We don't have any volumes right now because the market is closed, but there are certain interesting numbers around these areas. And I grabbed some of these because look at how the open interest for January are jumping. Look at this. Look at the 40. Look at the open interest, 200,000 for an 82 contract or the 42.4. So if normally how we read this is the market is expecting that this thing might go all the way to 40 or closer, and we're going to have a lot of volatility coming in. Is this positive for the equity market? No, it's not, because the volatility also means that equities might go down. And remember, we're trying to predict what's going to happen. But it's always interesting to see like this huge number of open interest on contracts that are telling me that the market not only is going to be volatile, but also this will signal a lower expectation for equities. So I grab some a little closer to the money, that in case we go anywhere higher here, I'll be deep in the money and I have less volatility, and I'll be in a certain way covering a little safer my port. Norman, how are you, my friend? Welcome. And that's one of the ways. But this is one way how we can trade it. And then this is the VIX. VIX, it will be. This is how the VIX works. This is the 1 hour on the VIX. The VIX, this is the 4 hours. You see, same thing. VIX went on the volatility of the 24th of August. It went pretty high, and now in sort of a different way, the VIX is sort of moving a little bit higher if I do something like this. And if I go to the 1 hour on the VIX, these are the moves that I gotta pay attention. I would like to see how this is traded within this channel. And I always use my 20 daily SMA and my 50 daily SMA after you probably are tired of listening every time that I do a lecture. Those are my guidance and my sort of northern lights on the bigger time frame. And I use them all the time, depending on which one it's crossing which one. And this, as you can see, the cross of the 20 above the 50 and the 200, this is telling me that might be expecting further move up on the VIX, and might not be very positive for the equity market. So I'm just waiting to see what's going to happen with this. And in difference with with the VIX, you can get shares of the VIX and you can buy some of this, and also you have options on this. And look at this, I have some positions here, and I have some at the money positions for the November 15 and more in the money for January 17. And this is I'm just hedging my port on this. A little bit with the VIX, a little bit with the VIX, and depending on what's happening, if I see them, they're going up and in the money and making me a good return, I might trim those and see what on the other side my equity port is doing. But I just wanted to let you know how these work, and you can always jump into them and see. You see the difference is not that bad. The spread is not huge, and then again, normally you look at the open interest at 40, 45. Look at 45. The open interest is still very high. Compare with the rest of the open interest of the other prices. And I use those as also as the way to select my contracts. Normally I use open interest and volume, and then I will see how theta and it's going to affect those contracts if I go into the shorter term. But in general, I just want to show how this, where are we in respect with the channel, and how we might expect to go a little higher, at least until, and then see if we could return a little lower. So I encourage you guys to go tomorrow and maybe on paper trade, and you can set up some of these, the VIX and the VIXI, and play around with them and see how they work and what you can do with them and how will that affect. You can always have a copy of your port on paper trade and see how can you use this to hedge your port and how they will work and how big do you need to go into them to actually be efficient on hedging your port, because sometimes you buy $100 worth of VIXI and your port is, you know, $100,000, might not be balanced on how to hedge that port. But if you have any questions or do you want any opinions, you can always contact any of the analysts or portfolio help, and everyone's going to be more than happy to help you out if you have any doubts on this. So now that we have been through all of this, we can get into any names or trades that we have done today and you have some doubts today, because I always want to go through what happened on the day and how everyone did and how we can use some of this knowledge for future. Norman, tell me, what name do you have for today? You always have something interesting going on. For me, I traded Apple. I traded Apple at open. Today, I traded Apple at open, and then I grabbed some more calls here. I kind of average and trimmed here, and I'm still on some Apple calls, but I added some Apple puts here for the longer term. Just because if you see the 4 hours, we are very extended on where we are. Look at where we are on Apple right now. So being 237.49, sort of the all-time highs with that not that far away, normally you would like to take a little protection on the way down. So I grab puts on that position, and my expectation for tomorrow on those is I want to see a hold on my 20 daily SMA or 229.7. And that's where I'll be interested on grabbing more the bounce on Apple for earnings. Remember, as you can see here, this is earnings. This is Thursday after market. And I expect this thing to go here, maybe even to 228. And whatever is going to happen on earnings days is going to be from here up or down. But let's see how the price, let's try not to predict what's going to happen. Let's trade the price action until Thursday and try to make some money, because this jump from here to here was pretty nice. And we have this gap up. I had some contracts that I thought that I bought here and I thought they were going to die. And then all of a sudden, with a little average here, I got out of them in profits, and it was pretty nice. But I want to see what's going to happen with this dump. And my expectation is that this thing might want to go to 230 again. So I gotta be careful with that.
Hello,
Amina.
Empanada.
Yes, Cookie. Hey, what's up, Norman? How are you, man? Where are you?
Good, bro. I'm working, bro.
You're working? You're just,
Yeah.
I see you walking around with your coffee, man. What are you talking about?
Yeah, that would be nice.
What,
Um,
what's going on?
I took two losing trades today, actually, bro. I took the LRCX. I was waiting for a bounce, and I got smoked, bro. It just kept on going down, bro. And same thing with Hughes. I was trying to play a put, and it paid me, but I didn't take my profits, and I took an L too, bro. So
Well, hey, listen, most of days you're making money with those names that you normally go into. It was a choppy Monday for sure. And I'm sure that you're not the only one who actually went red today. The thing is, like, if you go red on days like this, how deep you go in red. So the idea is that you go, really shallow, and you say like, not my day, not the price action that I like to trade, and you're off, and that's it. But the price action, look at how the Qs kind of jumped in, try to regain that 500, and from there just fade down again. So this is what it's going to be interesting for tomorrow. We are below 496.04, and I'm curious. We're filling the gap. Normally, every structure we fill those gaps as a technical gap, as a structure gap. We might see a little lower here, and if we go back to 494, the question is going to be: Are we gonna is there going to be another leg up from 494 all the way to 496 and try to trade around this area? Or from 494, are we going to just go back to 491? And that's going to be that's what I'm going to be, what I'm going to be looking for tomorrow on the pre-market. I want to see if this thing is going to drop a little here and stay around here. And that will be my ideal. Go back to this trading area. If you see, look at how, I'm going to grab the 1 hour. Look at how this trading area here is going to be. It was resistance, resistance, sort of, not much. Here was another hold for support. And I want to know what's going to happen here. Are we going to just break and trade around this area here again? Or it's going to hold and trade within these two? That's what I'm going to be watching the cues tomorrow. So that's going to be the most important for me. But you bought Neo and sold a call at the top, but because got suck. Neo, what happened? Let's see what words. I had a long time without watching. Oh, do you bought a call here, Mario? I mean, yeah, okay. So remember, one of the things that we need always to do, guys, is the only chance that I will take calls on Neo today. Let me go to the 50 minutes. Is I'm either here at open or a retest of any, like this previous level here. Maybe on, if you let me go to a little closer, you see this sort of consolidation here, like here. Here, this might be an entry, but if anywhere after here, there's no place to grab any calls here, guys. Nothing. Remember, hold your FOMO. Don't, if you're gonna chase, don't think about it too much. Grab it, and then, and this is, I'm not encouraging to to chase, guys. Remember, that's one of the worst things that we can do. But if you are gonna chase, you need to be fast and then set up your stop loss as soon as you have your break-even point clear. And then from there on, that's when you can chase. But if you waited all of this time to chase, uh, and if you were here and you sold that call to try to grab premium to see if it went down, look at this. Nothing. Flat line. Yeah, sorry. I thought that you were buying that call, but you it flatlined it. That sucks. Yeah, yeah. Nothing here. Well, you're holding it. You still have the chance that this thing is gonna work. So no worries about that. One
There's
interest.
there's also a company called CLS Empanada. It does cloud and aero defense. It's been a hot stock, man.
What's the name?
CLS.
CLS?
Yeah.
Celestica?
Celestica.
Where do you get these names, man? Really? You got these names that let me see the one. Interesting chart. Look at it. Look at the whole of the 20. Look at these bounce. For me, the entry was here or at the break of this high here. But after it breaks this high and this level here, it's gone. So I need to see a pullback somewhere. Normally I will get like previous day highs to see if it holds any of those, and then from there keeps going up. But this was a beautiful whole of this level here and up. Celestica. Nice. Are you in those, Norbert?
I'm in shares, bro. I got in like around 67. But I am gonna add to the position when it pulls back. Um,
You should set your stop loss at 67 right there, 68, now that you have some space, just in case. If we have a flush, you can be protected. Or if you want to long this on the longer term, you can just let it flush and then try to average price. But I'd rather sell here and just buy whenever if it flushes.
mhm. I was gonna
Just in
ask
case.
you about since AMD is coming in on earnings tomorrow, it's been downtrending for a while. You think it has good earnings? I'm not trying to play AMD, but I am trying to play SMH as an alternative.
Yeah, yeah. Well, the advantage that you have with SMH is the sort of the ETF that it's gonna have all the names in here. So it's not going to be affected by only what happened on AMD. But if AMD goes up, the thing's not going to go up as high, but it's going to be coming up. So this is what the chart looks right now on SMH. And and it's not that bad. What I like about it is, as I said, I'm using my 20 daily SMA, and I like this whole of the 20 SMA. You see, we are holding it. Like if you got it on the 1 hour, you see how we're holding this, holding, and look where we still can go back to. So my first thought tomorrow is going to be, are we going to reject 253 on SMH and try to go back down? If I'm going down, I want to see the break of the 20 SMA and go to 247. If I'm allowed to, if it breaks 253 and hold, I might buy some calls and see if we are going to be able to break 256 and go somewhere around here. But here, I'm in the middle of nowhere. My two main levels are either here, just because I have the 20 SMA there, or here. So that's one way to see it. But I like AMD. I believe that AMD might be interesting. Look at how it changed these. Look at how we've been on a downward channel and we just sort of broke up, and now we're going this way, and it's just touching my
That's your
20
what? 20 AMA?
my 20 daily SMA. So if these things is above the 20 daily SMA tomorrow pre-market, I might play it for the day, and depending on how my profit is, or my, or if I lose, I might play those earnings on AMD on the way up. That's gonna be
That's
my.
the same thing that I was thinking, bro. Like if I make a good profit tomorrow on day trading, I'm looking not this week, but I'm looking at the 175s for next week expiration. That's because if I play the same week, I mean, you could get burned if it just does a chop fest. But I mean, I think you would have a little bit more time.
Yeah, and those have a good open interest, and even the 180 is not that bad when you have that time, because we will have almost 2 full weeks, and it has a little more, like a 25% more open
What
interest and volume.
what is the price on them?
180, the 180 are at
Damn.
183, and it has 2,100 open interest versus 1,600 for the 175.
So the 180s you said? Okay, I'm gonna mark them.
Yeah, the 180s for November 8. They're
Yeah,
not that
because
bad.
if you really think about it, AMD just did an acquisition on a company, and I think they might report something new since they just acquired that company. And it's all in the AI space, you know.
Well, one of the things that I like about it is let's see, what do we got
Because I
here?
think it's a 10-point move, either up or down.
The expectations for it is 10.10 moves up or down. Yeah. Yep.
Yeah, I think this is my most confident one out of all of them since it's been trailing down so much. I say it has
Well,
a pop
it
here,
could
but
change.
it can happen, you know.
Last week we started to bounce, and as I said, if tomorrow we hold, if tomorrow. we have a move above the 20 and the 200 SMA, I'm certain to buy calls just for the sake of it.
Can you
And
send me a
but
DM if you actually do enter?
I will call it. But one thing that
Oh,
everyone has to be aware of it is if this happen, doesn't mean that earnings are going to be good or the guidance. It's just that the price action, it's signaling that we have more positive side. But whatever they're going to say on the call, that's what really is going to, set what the price is going to be for those earnings. So that's something that you always need to have to be aware of.
yeah. I was gonna mention you something about Google. I heard very bad news on it, saying people are trimming their position because OpenAI is taking over their search engine. And last time they reported, they did miss on orders. I know they brought the AI Gemini, but a lot of people are don't really like it. They kind of like more OpenAI, and their YouTube I guess is gonna be around 30%. The less I heard something about saying their YouTube ad business is gonna be one of the worst this ER. I could be wrong, but I heard this is
Uh,
the one of the weakest name out of the whole seven.
it's really interesting because look at the chart on this thing. For me, it looks ready to push. I think it's a laggard, but this is just based on the price action. That's the problem with all of this. Remember that our job is to try to get wherever information we have, gather that information, analyze it, and try to pair that with the price action. And look at the price action. Look at this. This thing, we had like an inverse head and shoulders. You see, head, shoulder, and look at how it's been rejecting the 168 level 1, 2, 3, 4, 5, and 6 times today. And either this thing is going to break down to 149, or we have all like our next is going to be 173, and then we have all of these to go higher. That's a good point, man. I'm going to keep an eye on Google. I don't know what's going to happen. I have some calls on Google today. I'm still
Yeah,
having. I swung. uh I have like 5 calls on Google, and I'm just paying attention if Google is gonna break 168 or not. And what am I using to see? Like this is one going back to the lecture. I'm looking at VIX, the VIX on the 30 minutes, and I want to see if the VIX start going up like very aggressively above this level here that you see. How do we touch this here sort of 2 times, say 20, 48, I'll be aware of what my position in Google is, and I want to see. But one other thing that we need to be aware, guys, is that independently of what the VIX does, news for a specific or individual name, it's going to make a huge change. So if Google has news and guidance is going to be great, and it declares positive numbers, doesn't matter what the volatility is it's telling you about the market. That's what individual name is gonna go up or down, is gonna move. But the idea is how do we mix all that information and indicators for our next trade. So I'm gonna keep an eye on what the VIX is doing, and I'm gonna keep an eye on. I have that Google position that I was expecting that after this rejection here, and we bounced. You see, why I took it is because we bounced again on that 20, and we have bounced here, we bounced here, we bounced here, and it was previous rejection. We went down, now we're on top, and then we bounced again. So my opinion was that from tomorrow until earnings, we might break this up and go higher. But as you are perfectly saying, Norman, if those news are not positive and the guidance is not positive, um, what I'm going to do is if I see some green tomorrow, I'll trim and I just minimize whatever I'm going to go for earnings. As I said, no, I normally do. I never go heavy on earnings because most of the time, guys, earnings you lose. That's a reality. It's a 50-50. It's just a gamble. Most of the trades on on earnings, you lose. And that's why normally it's great when you go small. And what happens some of the times when you make that 1,000% gains, well, it will cover for some percentage of those losers. But if you historically probably do your numbers, you probably are down still, unless you have played like 2 times and you have won those 2 times. But normally when the people have more than 3 years trading or earnings, you're probably negative on your average. So don't go heavy on earnings. Don't try to make money out of earnings. Make your money on the day by trading. And if you're green, you are able to risk some of that gains on earnings. And if you went up, you made some money. If you went down, there's no damage to your port. All right? That's the way how I'm gonna tackle that.
My
Uh,
last one I was gonna tell you, Empanada, is the SMR. Is the company that did a deal with Amazon on nuclear power energy.
yeah, we talk about this one, and it's been ballistic right now. Yeah, look at that. That chart is a beauty, and look at how again look at, and this is just for the people who doesn't use the daily SMA. I encourage you to put it on your chart just as a reference. Look how visually nice this is. When you see how it bounces, it just rides. And when it comes down, you see how the price action breaks, and then you see this thing coming up. And then when it goes up again, bounce and huge. So it's very overextended right now above the indicators. This is not really positive unless this thing just go parabolic and keeps going up. Normally, guys, when we have those overextended spaces, the 20 daily SMA tends, or any indicator tends to touch again the price action, and then it will give you another opportunity for another entry. So I will not chase this. Maybe not with options for sure. If I see a little and maybe a pullback, you can buy some shares that they are still sort of unexpensive, and then wait if we see more of that positive information about how the all the centers of data are using nuclear power
You
to
wouldn't short that?
optimize. Sorry?
You wouldn't short that at the top over there? You wouldn't short
No,
that right there?
not really. You know why? Because the so far most of the news about nuclear power being used for optimize the power usage for all these data centers is just positive. I haven't seen any of those
Oh,
going
okay,
down.
okay.
So unless I see some news that it's telling me that it's not being efficient, that they're having some trouble, that the contracts they're had with Microsoft and Amazon are not working out, I see
Mhm.
no reason. I mean, that they have to have pullbacks, but as I always say, I'm not going to be the first one doing like jumping in. I rather see the movement starting, and then I will, I will make my case to go down. But so far, look at that chart. Look at the 4 hours.
I
If I
think
see,
it's a clear indicator would be VST. That it's not like a pump and dump. It's something real, and these deals are gonna keep on coming. That's just my point of view. We got Microsoft, that was the first one for nuclear power energy with VST. Now we got Amazon with SMR. And then we got Tesla coming up, and then Nvidia, and so on. These hyperscalers need that energy.
well,
That's a good point.
the interesting thing is they're trying to use this energy to make it more efficient. Now this thing needs to work, and since it's just starting, we have not enough time to prove that the nuclear energy and the way they're using it to optimize that power, it's working. Because on the next years, we're gonna see if that investment really was worth it or not. But so far, for those companies making the power, that's just positive news because they have this new injection of money, so they can keep not only growing but probably like yeah, growing. I think is the correct word, and that's positive for them. And look at how this is being just up. But Mario, you're right. You The logic will say the thing might comes down at some time. It's a matter of just when and if there's some news. Not, I will not just only. It's really hard. I will not chase it. unless I have a pullback to any of those levels. But if the news come in, we might not see a pullback. Then it might just, you see how it did this sort of cup and handle, and then we bull flag and straight up.
That would be like a bear trap.
Uh, it could be, it could perfectly be, but so far this is just a bull flag.
It's
There's
a bull flag. Okay.
nothing right now. This is a bull flag here. It
Mhm.
went up and then high, and just probably some news here make this candle go a little higher. I have to be more educated and read a little more about this specific
There-
one. I will do so, and I will give you more information on my tab about this one specifically.
There-
That's interesting. I'm gonna keep my eyes on that one too.
Yeah,
There's a stock too, Empanada, that I put some money to work on just shares. NXC. It also does nuclear energy. NXE. Oh, with the E.
Ah,
My
and
bad.
it's sorry. Yeah, we
E
have
for
talked.
empanada.
We have to talk about this one because we have this. This is what we got. What do you got there?
Let's see.
Well, it's black on black. I can't read that, but this I got these levels.
Oh, that
set.
was for Neo. Sorry, that was for Neo earlier. I was trying to. It's because I got stuck in that selling a call at the top, and I was like trying to figure out what was my best option for tomorrow. Because it looks like if it keeps going positive, I don't want to. I don't know. I try to make a play because I couldn't sell it. I couldn't get rid of it at the end of the day because I was working. So
But you're good because the thing went flat. It's just flat. It's just sideways right now. The let's see how the pre-market is gonna open, and
yeah,
from there we can see. But so far you're good. I mean, you're 9%. I think that you're not that far down.
yeah,
Right?
yeah. I mean, I've taken worse losses, so it's like I'm willing to cut my losses. I tried to see. I was messing with it. I was buying them. I was buying them back cheaper, and then selling them like I was making like $5-6 at a time. I was like trying to play with it, but then I got stuck with it at the end because I lost a little focus. Yeah, I'm trying, man. I'm trying, dude. Like
No, you're good.
I'm self-taught, bro.
And
So
even if you set it your stop loss at 10%, it would it's not there. So it's okay. And listen, 5% is not that bad. The only thing that we have to be I don't think any of the data that we have so far until tomorrow is going to affect this unless we have news specifically for Neo. And we have and the other thing that can happen is because if Ford is going to affect somehow negatively any of the other EV names.
oh shit, I didn't even think about that. That makes sense.
Yeah. So now that we have whatever happened with Ford and that went down because the EV specifically went down, but that doesn't mean that the other names are not doing good because Tesla, look at the names. Look
Well,
at the
I
earnings.
think all the other Asian electric cars they went up today. I think what was the other one called? I think
We have Rivian, we have Neo, we have Lee, we have
it was one of them. I saw them. I can't remember. I was like, oh shit. I stopped messing with those. I just focus on Neo because that's like in my budget, and that's like what I'm
and
willing to lose. You know.
And I think even GM did a little better. But you
Oh,
see, we
okay.
have Tesla. Tesla we had last week, and look at how it went. It went 22% up.
Shit, I
and
missed out on that one.
and guidance and everything, it was amazing. So normally, as I said, we think that sometimes if we are in a sector like the EV sector is going to be affected and Ford is going to affect this, but let's see and wait. I think you're safe until tomorrow.
Mhm.
But hey, we'll talk about that tomorrow as usual, guys. I'm always on hold behind on VC in case I see anything happening. I'm back on the States. So I have my setup and have everything back. I normally don't like to interfere with whomever is there officially, like Flips or Nando right now. But if you have any questions, always DM me. Or if I see that no one is talking and I see something moving, I will let you know. But I will look a little more about the nuclear power for the cloud centers. And
That's SMR, the
yes,
nuclear power one.
SMR.
SMR. I'm gonna look at that one.
Yeah, SMR. It's called New Scale Power Corporation. And I will keep an eye on you for you, Mario, tomorrow. All right, guys?
Muchas gracias.
Yeah, siempre. Norman, Mario, thank you for everyone for the
Thank you,
questions.
Empanada.
Thank you everyone for assisting today, and hope to have a great day tomorrow, guys. Have a great night.
All right, buenas noches.
Buenas noches.